Every year around tax time, my inbox fills up with similar messages. Some of them say, "Mark, what changed for taxes this year?" And the truth is, a lot of what you're hearing doesn't matter. A lot of big bills, big headlines, big promises, but very few changes actually affect how much tax you pay, what you should do differently, or how your 2025 return will look. So today I'm going to break down the 2025 changes that actually matter, what's just noise, and what you can safely ignore. Hey, my name is Mark too, and I'm a CPA and former reseller who specializes in helping resellers and online businesses and content creators with taxes and with growing their businesses profitably. This video is about 2025 tax activity, meaning that it'll apply to the tax return that you file in early 2026 or maybe later 2026 if you get an extension. For a long time, the assumption was that 2026 would bring a massive tax reset. Under the original rules of the Tax Cuts and Jobs Act of 2017, a lot of individual provisions were scheduled to expire after 2025. That created years of tax cliff headlines. Recent legislation has resolved much of that uncertainty by keeping the current rate structure and standard deduction framework in place. So for planning purposes, you're not starting at an automatic bracket jump. You're not losing the higher standard deduction overnight, and the system remains largely familiar going into 2026. For 2025, most of the widely applicable changes are the boring ones. The tax brackets creep upward, the standard deduction increases again, and phase outs move slightly higher. So this isn't really a tax cut, but rather inflation protection. But it does mean that slightly more income will be taxed at lower rates, there will be slightly more room before credits phase out, and there will be slightly less accidental tax creep. So nothing exciting, but it's still helpful. If you run a business, this matters more. For example, bonus depreciation was reinstated to 100%. This isn't a video about depreciation, but this essentially means that large purchases can be written off aggressively again, which can be a big tax benefit. Tax reporting's getting tighter. Crypto transactions begin third-party reporting via the new Form 1099-DA for 2025 activity, and that means brokers are going to tell the IRS exactly what type of cryptocurrency you sold and when. Online platforms and payment processors like PayPal, Venmo, Etsy, and eBay have clearer visibility rules into that $600 threshold that has thankfully permanently been reversed back to the original $20,000 and 200 transaction limit by the One Big Beautiful Bill Act, which I talked about here. That bill also brought in some powerful new deductions available starting in 2025. So one is the deduction for tips and overtime. So if you're a W-2 employee, you can now deduct up to $25,000 of tip income and up to $12,500 of the premium portion of your overtime pay above the line. But that's only going to help you if you were reporting your tips on your tax return to begin with, which, let's be honest, many of you were not. There's the auto interest deduction. So if you bought a US assembled vehicle in 2025 or later, you can deduct up to $10,000 of the interest on that loan. And then one thing that'll help if you itemized your deductions rather than took the standard deduction is that there's an increased state and local tax cap. So the cap for that deduction has increased from $10,000 to a much more generous $40,000. These are huge for eligible taxpayers and impact your adjusted gross income, which is the number used for almost everything else in the tax code. Now here's the part most people get wrong. When you hear about new deductions, new caps, new write-offs, it's easy to think, cool, this changes everything. But for most people, it really doesn't. Most of the changes to these things aren't universally applicable. And let me give you a few quick examples. If you're a W-2 employee who doesn't earn tips, doesn't work overtime, doesn't itemize deductions, and doesn't buy a new car, almost none of the One Big Beautiful Act changes move the needle much for you this year. Your taxes in 2025 will look a lot like 2024. Some slight inflation adjustments, same basic structure, same planning principles. On the other hand, if you do fall into one of these categories, tipped workers, people working heavy overtime, business owners making equipment purchases, high tax state homeowners, the impact can be very real. And again, even if you do qualify, these are going to benefit you only if you're actually reporting your tips. You don't get bonus depreciation unless your books actually reflect the purchase correctly. And this is where some people get burned. They hear about a new deduction on TikTok, assume it's automatic, and then retroactively try and force their numbers to fit the rule. And that's how you create audit risk. Here's where I would focus if I were you. For 2026, focus on clean bookkeeping. That beats clever strategies. Focus on having accurate records and proper tax planning. If you get that right, then the taxes become manageable. Audits get less scary and notices become less frequent. Most of the tax pain that you'll experience comes from neglect, not from tax law changes. And that's part of what I do in my online course, Reseller Tax Academy. It walks you through everything you need to know to have a solid basic understanding of what you need to do tax-wise in your business to optimize your tax situation, kick your tax anxiety to the curb, and feel confident about about your taxes. If you have any questions, feel free to post them below. Subscribe and check out the links below for more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your businesses profitably.